Is there any discussion within the FOMC to alter or accelerate the balance sheet reduction program in contemplation of this flattening yield curve?
Thank you. No, there's not. We very carefully developed and socialized to the public the balance sheet reduction, balance sheet normalization plan. It's working smoothly. We're not thinking really about changing it, except in the conditions that we've identified, which would be, a meaningful downturn.
Yeah. If that's the case, what is the Fed's plans with respect to that flattening yield curve, and what risks does that pose to the economy?
Maybe let me tell you how I think about the yield curve. So I think we know why the short end of the yield curve is moving up. It's because essentially out to 2 years or so, really the market is pricing in its expectations of what the Fed will do, plus or minus maybe a little bit of a term premium when you get out to 2 years. So we know why the short end is moving up. The real question is, what's the story with long rates? So the long rate, like take the 10-year Treasury, you have to decompose that and ask what's in it. And I think the whole point of the yield curve conversation is that you can decompose that, and in that whatever the long-term rate is, 2.85%, I guess this morning, the 10-year. What's in there is a term premium, but there's also sort of the market's estimate of the long-run neutral rate. And so it's telling you something, and we're listening. But it involves many other things. You've got to kind of do a decomposition to pull that out, and then that tells you what the stance of monetary policy is. So, whether policy is accommodative or whether it's restrictive, and that is the important question. Not the shape of the yield curve.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.